charged some in 2019 thing.
Vintage. Those are going to sell for hundreds of dollars on eBay one day.
These things are awesome. Honestly, I had nothing to do with this. This was all Brian Shannon. These things are awesome. Hey guys, JC Peretz here, founder of allstarcharts.com, and welcome back to Pardon the Price Action. Straza, good to be back, no?
I'm so happy to be here. I missed the show.
I know, me too. Listen, we're doing other things. You know, we're busy. We try to do the best we can, but we are back. I'm more excited than ever. We're going to be producing a lot more content, so keep an eye out for that. Now let's get right into it. I mean, how do we not start with the banks? I mean, we could take this in so many directions, but why don't you simplify it for everybody? What the hell just happened?
So I think this is a really good illustration of what just happened. If you look at this chart of Silicon Valley Bank. So last Wednesday night, I think it was, one of the largest banks by deposits in the United States put out a press release, Silicon Valley Bank, saying that they were going to need to raise capital, shore up their balance sheet a little bit. And it seemed like a pretty, sure, it was a bearish development, but it didn't seem like the end of the world at the time, Then we came in Thursday morning, the stock's down 60%, trades throughout the day with a lot of volatility. Then Thursday night, Peter Thiel, Founders Fund, and VCs all over start telling their founders to take their money out of Silicon Valley. A bank run ensues. By Friday afternoon or Friday morning, it was very clear that they were not going to make it and that they were going under. We lost Silvergate earlier in the week. We lost Signature Bank on Sunday. So we're having a little bit of a regional bank crisis here. And to me, if you just look at the price action, something like the regional bank ETF KRE, Friday morning at the lows, this was as bad as it got in October of 2008. So for me, I listen to the message of the market. The market's not taking this lightly. I don't think investors should either.
All right.
So on the heels of this banking volatility, U.S. Treasury yields just experienced their worst collapse since Black Friday. Got to go back to 1987 for the rate of change to hit such a low level on a short-term basis. What do you think about that?
The stock market doesn't like bond market volatility, right? It gets spooked, and we tend to see a lot of stock market volatility when bonds are really moving. We didn't, though. We really haven't seen real volatility in the stock market at all. You've got 2-year yields having huge moves. You're seeing some volatility like in regional banks and more interest rate sensitive stuff for sure. And some of the ratios between growth and value being affected with those moves in yields. But when you zoom out, when you broaden out, generally speaking, have we really seen that much volatility in the stock market? No, right?
If you look at this chart of the bond market volatility, the move index with the VIX,
yep.
I mean, either the VIX is going to have to catch higher or bond market volatility is going to come in. I do think, like we've said, when yields move this swiftly or this aggressively in any direction, it's typically not good. But I think if you take a step back, whether it's the 5-year, the 10-year, or the 30-year, look at those summer pivot highs from last year. If those levels hold, maybe we stabilize a little bit and things cool off.
All right, Bitcoin breaks out. How about those cryptos? What do we make of BTC hitting its highest levels in 9 months? Mr. Straza, crypto is back, huh? Or no?
For me, this is textbook. I mean, look at this chart. This is a beautiful chart right here. I mean, this is as nice as a rounding bottom or a trend reversal pattern gets. You can call this an inverted head and shoulders for any pattern fanatics. Listen, we're taking out this 25,000 level. Call it a rush to safety or some sort of defensive trade. I don't think that's it. I think rates have really come in. The dollar's come off. That's good for risk assets, especially some of the most speculative, growthiest areas of the market. And Bitcoin is one of them.
When I'm looking at the Ethereum Bitcoin ratio, I wouldn't have expected that we'd be making the lowest levels of the year, right? In Ethereum relative to Bitcoin. If you would have told me what's happening, interest rates are coming off and all these growth areas, long duration assets are doing well, Bitcoin's doing what it's doing, I would have said Ethereum's outperforming in that environment, would be my guess, right? We haven't been seeing that at all. So I'm very impressed by Bitcoin. I think that says more about just the relative strength in Bitcoin and less about, risk on, risk off, sort of don't overthink the intermarket relationships, trade what's in front of you, and Bitcoin showing relative strength. I don't think it's a bad thing at all, huh?
Listen, maybe it's a flight to safety within the crypto complex, but if you take a step back and look at where we were on Friday or this past weekend, we had a banking crisis on our hands, right? Risk of contagion. The market it could have been a bloodbath. Instead, Bitcoin's up 10%. I think it's hard to, however you want to cut it or whatever narrative you want to shape around it, I think it's hard to be bearish at all on that price action, especially, when put in the context of what else was going on.
If we're above the late 2017, 2018 highs in Ethereum and Bitcoin, you can own them. And we are above those, and I do own them.
Couldn't agree more. Me too. So what do we got next? Energy. All right. So just like we talked about, hey, rates coming down is bullish for some assets, growth, tech, cryptos. It's also bearish maybe for some other asset classes. So energy is really on the ropes right now. What do you make of these new lows in XLE?
Yeah, remember how many times we've talked about how energy hasn't even broken out, right? The XLE is still below its 2008 highs. So, the fact that we're turning below here, I guess shouldn't be that surprising. Chevron's still below its former highs, right below that, like 186 level. You look at Occidental Petroleum still in that range. You look at things like the XOP, Explorers and Producers, still below their 2014 highs. So a lot of these energy areas are still stuck below overhead supply after a huge run higher. So what does this mean? I think it continues to mean that it's not ready to make that next move yet, right? The last couple of years of tremendous outperformance and rippers, the consolidation after that clearly continues and needs more time. I don't necessarily think this changes the bigger picture, more structural outlook. If we've learned anything from energy is that these trends last a long time, but a breather after a run like that, I guess makes sense. And when you look at prices themselves in the indexes, below overhead supply in a lot of areas. So more time, right?
What I'm hearing from you is energy should really be treated as, innocent until proven guilty, right? And
it depends on your time horizon, right? Longer term, I think it makes sense from the long side. But if you look shorter term, you're still below overhead supply in the most important areas. I think oil holding the low 70s, I think, and rallying from there could be a catalyst to get energy going again. But oil really needs to stick that landing. It's flirting with it as we speak, as we talk here. It's flirting with those low 70s. If we lose that, there's no real evidence that energy stocks are gonna take off anytime soon, right? So I'll be looking at oil.
I would look to the 2018 highs, whether it's crude oil, Brent crude. You could say the same for XLE. Watch those 2018 highs. If those break, I think things get really dicey. Next topic.
I couldn't agree more. All right, gold. What do you think of gold? Big move. The rate of change, 2-day rate of change, highest in several years. I know you love a good momentum thrust as good as anybody else. So 2-day rate of change, most in a few years. Not bad.
Most basic way to measure momentum, right? How much did this asset move over the past X days, right? So for gold, really caught a nice bid with rates coming off, dollar coming off, with everything that was happening with the banks. Really ripped. And all the way back to the first quarter, maybe early second quarter of 2020, which if you remember back to that time period, that was the very early stages of an epic rally for gold, where it went on to go and make new all-time highs. So is this the beginning of a new leg higher? I would say when you look at gold and other currencies, things look pretty good. Maybe it's just, gold in US dollars is about to join the party now.
Yeah, just like we were talking about before, Bitcoin and Ethereum, if they're above their prior cycles highs, those late 2017, early 2018 highs in Ethereum and Bitcoin, you own it all day. I think gold is the exact same thing. The difference is that gold is not above its prior cycles highs, which was in 2011. In the case of gold, we're not above those highs. So until that occurs, could this be it? We keep testing those levels, keep bumping up against those levels in gold price in US dollars. I think we do break out ultimately. Could this be it? Maybe. It certainly could be, but I'd be a lot more confident about it if we actually are above the prior cycle's highs like I am about Bitcoin and Ethereum. It's done that work already.
Yep, I would agree. I think we get there. It's just how long does this take? We're very much in a sideways, range-bound, messy market for precious metals. Another guidepost I think you could use for precious metals is 2150 in silver futures. That's a huge level. If we're above there, both silver and gold are probably things you want to own. So this is a little game that we like to play where we're going to find a word or phrase, and you're going to tell me the first thing that comes to mind. And I want to hear about your politics. Bailout.
First thing that comes to mind when I hear bailout, I think about Barry Ritholtz, author of Bailout Nation. Great book. Highly recommend it. And he talks about, 2008. I remember reading Barry's blog almost every day, or I'm pretty sure I did read it every day. Barry Ritholtz's blog, The Big Picture, during the financial crisis. And, a lot of those blog posts and stuff turned into the book, sort of the inside story as to what was happening as the world was completely falling apart. So when I think bailout, I think, that era of financial markets. I think about Barry's book. I think about my mid-20s. We've come a long way, Straz, both the market and me.
When I hear bailout, and I love Barry, love his book, good stuff. Love the Ritholtz guys. When I hear bailout, I think, boy, that's something the United States has really gotten good at. We step up, we bail things out. I think we did the right thing. We had to do again last week. And I think it's also very important to draw a line between, who got bailed out here. It was not the executives. It wasn't the investors of these banks. It's the depositors. And I think that's the right thing to do. So kudos to the U.S. government, FDIC, the Fed, Treasury, everybody for getting this done again. Every few years, we have one of these moments. But I think this could have been a lot worse than it was. So good job.
The depositors got bailed out. The FDIC just got bigger for all intents and purposes. The investors themselves, bondholders, they got wiped out as they should have, right? That makes perfect sense. The depositors, they're the ones who got their money, which is great. Fantastic.
I'm with you. So speaking of bailouts, we have this thing for Occidental Petroleum where they just keep getting bailed out. The Oxy shareholders, every time the stock hits 60, we're calling this the Berkshire put. How do you feel about it? It just happened again for the first time since last fall.
We were having our conference call with All-Star Charge Premium members, and I was saying, man, look at Oxy where it is in the high 50s. I wonder if Warren Buffett's going to file a Form 4. And you were in my head because you and I were talking about it earlier that day, and you were like, yeah, he would have filed it already. Da, 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 da. And I was like, oh, maybe he would have. And then sure enough, the next day, boom, filing. Uncle Warren at it again underneath those levels. You can see here in the chart, every time, all those circles are all of Uncle Warren's purchases. I mean, it's literally every time it breaks below 60, and it just did that. So I'm curious to see how much more he's going to buy here, right? He's got over 30% at this point already, and then he has the ability to buy up to 50%. Like, he's gotten approval for all that. And why would he seek that approval? He wasn't planning on doing that. So I'm curious to see how much more he's buying. Are you expecting another filing one of these days?
I think so. But in my defense, right, the reason I started turning bearish on Uncle Warren's not going to come out and defend this level again is because there's a change in character about the way he did it this time. If you look back, towards the left-hand side of this chart, we've circled every time that Berkshire's come out over the past year now and bought stock. And where? As soon as Oxy broke 60, they were out buying that day. This last time around, we were below 60 for a week before the buying began. They almost started buying it on strength back above 60. I think he will be back. I don't know why they would get FERC approval to own up to 50% of the outstanding stock if that wasn't their goal. I think that's where this thing is headed. And, good for him. Just the patience. They clearly have a plan. They buy below 60. They wait till it gets below 60. And that's just what they're doing. So I think as an investor, there aren't many better ways to enter a trade than knowing you're buying. Warren Buffett and Berkshire Hathaway is buying. With Occidental, we can do that at this $57.50, $60 level here.
What's interesting is that Berkshire Hathaway, they own other things. They own other energy stocks like Chevron. They own Apple and some bank stocks and things like that.
Bank of America.
And they are the largest component of the U.S. financials index. And they are literally this week making new all-time highs relative to the financials index. So Berkshire Hathaway, relative to its peers, new all-time highs. Very, very impressive. No doubt about it. And he likes Oxy under 60. So, I don't hate Oxy under 60, right?
We've seen it before. He keeps going back to the well. I think Oxy against 60, 57.50, a great trade. Just what we haven't seen yet is, buyers show up here and then price go on to hit our price target. We've been waiting for about a year and a half now. Maybe this is it. This top fails. It's go time. We're looking towards 88, those 2018 highs. All right, what do you got for final word?
Well, you start. You have it. I know how excited you get about this stuff.
So we're talking about insider buying. We're talking about banks. We're talking about Form 4 filings. Banks were under immense pressure since late last week, right? We had a true banking crisis on our hands, called a regional banking crisis, whatever. There were a handful of CEOs who came out yesterday, which was the third straight day that banks were getting hit very hard. A lot of banks were down 40, 50, 60% for 3 straight days. 2 bank CEOs, QB, CUBI would be the ticker symbol for QB. That's Customers Bank Corp. And then MCB, Metropolitan Bank Holdings. The CEOs of each of these companies came out. They bought about $500,000 worth of shares on the open market yesterday at bargain prices, filed those Form 4s, and the stocks rallied tremendously, roughly 100% each intraday. I think that's great leadership. Kudos to them. That's what CEOs should be looking to do in this environment.
All right. Last thing I want to mention is the relative strength out of Meta. I find it interesting that as soon as they changed their name from Facebook to Meta, the stock got absolutely destroyed. How much did it lose? Like 60% or something ridiculous? More, maybe? A lot.
Over 100 billion in market cap, a couple $100 billion in market cap.
Got crushed. And as you're seeing, they've been changing their approach away from the metaverse and away from, other things. And as they do that, the stock has been going up. Has been one of the best performers over the last several months. Notice also how Meta started to rally as soon as interest rates stopped going up, like within a few days. Yep. I don't think that's a coincidence. I think, if interest rates continue to chop around, that was a high in the 2-year. I think, some of these more large cap growth areas can do well this year in that environment. Meta has certainly proven that. I really like that gap and go. We're in it, but we have a free ride because we were in the we were in the calls. So we have a free ride at this point. But for a new trade outside of what we were already talking about in Meta, I like buying a breakout above 200. A breakout there for a new trade, not even the old one that we already have on, but new position. I like a breakout above 200. I like that gap and go.
I agree, and I also think just from like a broader perspective, interest rates have gotten hit really hard. The market is adjusting their expectations for Fed rate hikes in the future. So all the interest rate sensitive stuff, whether it's banks, energy, commodity stocks, not performing very well since last week. But the things that tend to do better when interest rates are lower have more than picked up the slack. If you look at growth, you look at tech, you look at the NASDAQ, the entire market, could have caught a little contagion and been selling off aggressively. But instead, we had tech stocks higher through all this. I think it's very important to kind of take a step back and be mindful of the resilience from these stocks. I think it's great rotation.
Yep. No doubt about it. Mr. Straza, as always, my pleasure. And it's nice to be back on PTPA. Thanks for watching. Make sure to give us a like, hit the subscribe button so you never miss an update. And follow me at All-Star Charts and follow Steve at S Straza. Leave a comment below. Let us know what you think, and we will see you next week.